Welcome to another edition of the Finance Forum. I am Abdu-Raof Hanslo. Today we're honoured with the presence of a senior economist where we'll be touching on those pertinent questions that all consumers are concerned about. In this edition we have a very special guest by the name of Mr. Johan Els, the senior economist of the Old Mutual Investment Group. And as we all know, the Old Mutual Investment Group has been highly involved in our community as far as Islamic finance is concerned. They're the managers currently of the Al Barakah Islamic Funds, which has probably been the oldest investment funds in the unit trust sector in South Africa well, they were the first. At the end of the day, Old Mutual has been named synonymously attributed to finance, and we're honoured to have Mr. Johan Els, the senior economist, with us. Good day to you, Johan.
Thanks very much for the opportunity.
No, it's only a pleasure, and I think your job is a little bit more difficult than mine today. You sitting in the hot seat where we're going to be asking the very important questions concerning our consumers and how our current situation in finance in South Africa is affecting our consumers. And I think to start off, Johan, is just to give us a broad outlook of the challenges currently facing the South African economy.
Yes, not an easy question because there are so many, but I think it all hangs around, are we going to be downgraded by S&P and maybe the other ratings agencies from investment grade to junk status? And that depends on a whole lot of issues, and amongst those are our growth is too low in South Africa. GDP growth this year probably around zero. Even though we had a pretty good second quarter. But too low growth means that tax incomes is far below what government needs. So the fiscal deficit, the government's balance of income versus expenditure, is too high. And that is concerning for the ratings agencies because then it impacts on the country's ability to repay debt. So if we add 4% of GDP to our debt levels every year, ratings agencies don't like that. So what impacts that as well is, of course, confidence in the economy, because if there's no confidence, consumers don't want to spend, they rather save. Businesses don't want to invest because consumers are not spending, then the economy can't grow. So economic growth, or the lack thereof, one of the biggest issues that impacts on that ratings decision.
I think, you know, from our side, we've been hearing a lot of talk in the media, specifically around specific events happening in our economy. And those specific events being the rise in unemployment, the lack of consumer spending, and then now we have even bigger issues concerning our very favorite finance minister, Mr. Pravin Gordhan, and the issues surrounding a possibility of him being taken out of office. Now, we in 2010, in 2015, we saw, we had a taste of what could happen if a superior power intervenes in a ministry as important as the Ministry of Finance and Treasury. I think we have a tremendous amount of faith in the Minister like Pravin Gordhan. In your opinion, what we saw in 2015 when Mr. Nene was taken out of office and the market's reaction to it, how would our economy react and our markets react to a possible removing of a minister like Mr. Pravin Gordhan from office?
I think that's a big risk because, as you say, and you touch a whole number of important points there. So markets don't like that uncertainty. Markets don't like that potential volatility. And as we saw then in 2015 in December, that the rand blew out substantially. Now to some extent maybe that is priced into the markets to some extent, because we can't 100% know how much is priced into the markets, because markets are actually now thinking that, hang on, this might be a fairly big probability that the Minister of Finance is removed. And why that volatility impacts so significantly is because S&P, the ratings agencies, when they kept our rating unchanged in June, said specifically, some of the reasons are that they trust our institutions. They specifically mentioned the Reserve Bank and Treasury. And as part of Treasury, the Minister of Finance, the Head of Treasury.
Yeah.
So that trust in those institutions means that if that trust is removed, if the Minister of Finance is removed, it impacts on markets. Markets don't like that volatility, and thus the rand could potentially weaken quite a bit more. But then, as I said, some of this might be priced into the markets, because over the last 2-3 weeks we've seen these news events in terms of the Minister of Finance and his potential involvement in hawks that wants to prosecute him. So all this volatility means loss of confidence in the economy, and then it gets back to economic growth or the lack thereof, and then it gets back to some of the issues you mentioned in terms of unemployment rate that remains high forever. Because there's no growth that will get unemployment lower. So all these things hang together, and they all hang on that trust in the institutions. And South Africa has always had very strong institutions, especially over the last 22 years, where the Reserve Bank and National Treasury has been the guardians of the economy. So you don't touch those. And foreign investors hate that. And that uncertainty. So potential lots more volatility, even if I say some has been priced into the markets, but potentially a lot more volatility. It'll be very bad for the economy. It'll drive foreign investors away.
Okay, now in the last 3 weeks, we were smiling because we saw the rand recover to some extent. But then suddenly, when this news broke that the minister might be prosecuted for events that happened prior to him even being the Minister of Finance, we immediately saw the currency sort of tank out once again. And would that be an indication, or an eye-opener to us, of what we can expect going forward?
Yes, it could, because talking currency, if we try to separate the potential impact of the Minister of Finance being removed, the short-term outlook for the currency is actually very positive in terms of foreign investors wanting to invest in emerging markets like South Africa again. So the short-term outlook could be positive. In other words, the rand, excluding any potential political, treasury, Minister of Finance events, could be a positive thing. And in fact, that it can strengthen back to where we saw it a month ago, around 13 something to the US dollar, or maybe even stronger, because we also see the current account, which is our balance with the rest of the world, improving. So some of the fundamentals for the currency has improved. Some of the global issues around emerging market currencies have improved. But now you lay this on top, this uncertainty around the Minister of Finance, then the currency could potentially blow out significantly. The one thing that I must come back to, we try and make investment decisions for the long term, in other words, 5 years plus. And there, our currency will, unfortunately, for some, and fortunately for others, keep on getting weaker and weaker, because our inflation is forever higher than that of the US, for instance. If our inflation assumption is 6% forever in South Africa and 2% forever in the US, that 4% difference is by which the currency will depreciate over time. So short-term moves, as I said, economic fundamentals, currency might improve. Political events might weaken it substantially. But if we see through that volatility on a 5-year investment horizon, 5-year plus, the currency will keep on depreciating on average.
I think there's always light at the end of the tunnel, and as we interview many people on the show, and specifically financial advisors, and we're always speaking about the pressures in the market. Here we're getting first-hand information from an economist. That's the difference here. But the one thing that always comes out of those meetings with the financial advisors are that any pressure on the market always heads towards opportunity as well. So be it a weakened currency, be it volatility in our markets, there's always opportunity. And I think to get that commitment from you as an economist when speaking to you is far greater than just speaking to a financial advisor. But going back to 2008 and 2009, Johan, we saw an international global meltdown of finances during that period. But yet South Africa was sort of safeguarded in that regard. And I think that was due to legislation that came out from the then Minister of Finance and the Reserve Bank, the legislation that was passed. And that safeguarded the banks, and that safeguarded the consumer to a certain extent as well. Although we did feel the pinch.
Yes, no, for
we
sure.
did feel the pinch. If we should enter an extreme recessive period in South Africa in this next while, have we planned for it, in the sense that we planned for it in 2008, 2009? And are our banks still sound enough to mitigate the risk of a recession?
So once again, very important points raised there. So it might be a convoluted answer, if you'll forgive me. Nope. Then and now, our financial system is well regulated and healthy. Much more healthy than other similar emerging markets like Brazil, Russia, Turkey. So we stand out well against those, and well regulated and well financed against developed market financial institutions. And that's still the case. So our financial system, our banking system, individual banks are all healthy and sound. And that's really one of the very strong points that ratings agencies like us about South Africa as well. And then coming back to the consumer, in 2008, 2009, this economy lost 860,000 jobs. That was huge.
Yeah.
This time around, we don't think there'll be significant job losses in the economy. So no, I don't think it's going to be an extreme recessive period going ahead. In fact, I think this year is the bottom in terms of economic growth. Even though it's very slow, the growth this year probably be around plus 0.5%, next year probably 1 to 1.5%. It's low growth. Make no mistake, it's not enough to make inroads into unemployment. But the underlying financial position of consumers is far healthier, even though we're still feeling the pain. It's better compared to 2008, 2009. The interest rate and inflation cycle is far more subdued than what it was then. That helps consumer incomes. Less job losses now, maybe no job losses on average, compared to 860,000 then. And wage and salary growth is still around 8%, above inflation thus. So consumer incomes still decent, even though there is pain, and some sectors of the economy are hurting more than others. On average, we're often in a better position than we were in 2008, 2009.
Those fine words from economist Johan Els, the senior economist at the Old Mutual Investment Group. We've reached the end of the first segment of this program. Stay tuned, there's more to follow.